The following is a technical analysis on Williams Sonoma, a company of the consumer cyclical sector and specialty retail based upon the daily interval, where the demographic falls within the mid upper to upper class, where consumers anticipate premium prices for top-notch quality, seeking the prestige of owning high-quality products rather than emphasizing the notion of scoring a good deal. And I believe we've reached a critical juncture within the technical aspects of this stock. And call it the 188.18 price resistance, call it multi-year, 3-year major reactionary high price resistance. And that has been just a well sought out and highly respected key inflection point. And I believe the scaling in process could very well start to scale in, set some stops up above the 118.18 price resistance, where long traders, bull traders, they want a solid daily candle infused close breakout above that key resistance level, only to potentially backtest it and squeeze out the remainder of shorts that are selling the stock here. And what will be so significant if we rally up to the 188.18, call it a 2.4% from here, if we have a hardline rejection, that will increasingly add to this huge divergent high based upon the August 2022 trough, and you will have very large confirmed negative and bearish divergences that have only extended on a much larger scope, only increasing the odds for a much larger drop. Call it more of an aggressive short trade setup, where you could begin the scaling in process and then set some stops up above that 118 price support level. And then you'll have an additional first target at 176.94 price support for 4% crash. Call it near a 2-to-1 risk reward ratio, down to the 167.45 price support for a 9.6% crash. And then ultimately down on a revisit of the 157.70 price support, call it a triple line of transitioning points correlated in confluence with this primary reactionary uptrend line off the June major reactionary lows for a 14.8% crash, with an additional 50-day, 50 exponential moving average hovering in down below. The velocity of this move completely gapped up, completely took out the 50-day moving average, and it's been a straight line up. And usually when you have just a full-on big blast move to the upside off the daily interval, really what you would call a reverse crash setup. And when you have volatility of that, the velocity of that move screaming up to the 188.18 price resistance, could act as a beneficiary of a brick wall once arriving and slamming right into that key inflection point. You into the hourly interval here, and this is what I see here. Again, additional negative and bearish divergences on multiple technical indicators. You have the stochastics 1033 really above the 85 threshold, which is pretty bullish here. But again, you'll have a confirmed negative divergence. Even if we sort of rally right up to that 188 price resistance, you could have that remain intact, have the negative and bearish divergences only slightly expanded for an additional enlargement of the negative divergences that will still remain intact if and when we go on to reflect, are rejected pretty heavily if and when we go on against that major key transitioning point, where you additionally have an unchecked backfill the gap right at the bottom of that key inflection point. And I believe this would be the utmost key inflection point for long traders, bull traders. They want to see a solid breakout above that major multi-year price resistance level. So again, squeezing out the remainder of those shorts for a prolonged move to the upside. And a shout out and courtesy of my subscriber who had pointed out Williams Sonoma as a short trade setup idea.